Hi, this is Akmir with a Eurasia Mining Technical Analysis Special here on Share Talk. Just looking at the recent history of the stock, see that there was quite an extended shoulder for the stock there towards 35 pence zone. There was sort of 3 or 4 times when the shares tried to break back above 35 pence and didn't. There was also the loss of the 50-day moving average. That's the blue line there, around 32, 33 pence, just in the last week or two. But all the while, we actually stayed above an uptrend line from February around the 28 pence level. And so it wasn't necessarily the case that this was going to break down. We had consolidations like this before in October, November, and also perhaps even more bearish maybe in September going into October before a new leg to the upside. If there was a giveaway in terms of a potential breakdown, it was the RSI indicator that fell below the neutral 50 level towards the end of December, and we had those peaks for the RSI at 50 or below, and that tends to be, not always, but tends to be a indication that things are starting to turn bearish. But of course, we did see the same thing in September when the shares went into consolidation mode, and also for a while in November as well. So multiple factors there, but none really a complete killer in terms of suggesting that we would break down as we have done. In terms of what might happen next, which is maybe more might be more useful, there was and is a July support line there, falling one from there, which is just running through 16 pence, and then the September floor there around 15, and then down to today's intraday low 14. The other point to note is the still rising 200-day moving average. Normally, when we see a stock or a market fall below a rising 200-day line, it's a dip to buy into rather than a sell opportunity. We saw an example of that, I think, in Greatland Gold just recently, in terms of the 200-day line still rising and the shares then consolidating. So in terms of the technical rules, above 14 pence on an end-of-day close basis, one would be giving the benefit of the doubt to the stock. On the long side, also, the RSI at 23 is now very oversold, so there's likely to be a positive reaction there. If you're looking for a proper momentum signal, it probably would be a day, 1 day or a weekly close above the 200-day moving average, just under the 20 pence level currently. So 20 pence plus as an end-of-day close could do the trick in terms of suggesting that the bull run would re-establish itself. But early days yet. The other point which which is worth noting as well, so far we haven't filled that gap down from the February to July area, so again, that's something of a plus point for the shares. But the main plus point, I suppose, at the moment really is that rising 200-day line, and the way that normally a stock or a market will bounce off that successfully, and maybe that's what we'll see now.